Hello and welcome to another episode of Market Watch. Today I have with me Trisha Peries from Frontier Research. She'll be giving us an overview on the macro outlook of Sri Lanka and to see where we are heading from here with the current high depreciation of the rupee and in terms of the rate movements. So we'll get an idea from Trisha. Trisha, thank you so much for joining us today. So today, just to kick off with things, I think the major thing everybody's talking today, in the market, we walk down the streets, is how the depreciation of the rupee. So I think we've seen about a 10% depreciation already year to date. So where do you think the rupee is going to be from this point onwards, Trisha?
Yeah, as you mentioned, the LKR has been the topic of interest recently. It's hit about 169, 170 levels recently, and this is quite a high depreciation when you consider the fact that just in 2017 we just saw about a 2.2% depreciation. So 10% over 9 months is quite significant. Yeah. But what's really important to note is the fact that this is not really driven by any domestic strains or domestic pressures, but very much driven by what's happening in terms of global markets and more specifically what's happening in emerging markets. Yeah. So in terms of backtracking a little bit on giving a background of why there's been this depreciation, basically what's been happening is the US Federal Reserve has been on a monetary tightening stance. We've seen 3 rate hikes so far this year, and what's happened because of this is that investors have been taking their money out of emerging markets and repatriating it into the US, and this has seen the US dollar strengthening. So in effect we've seen the emerging market currencies weakening. But of course, the more recent depreciation that we've seen in the last few weeks has been led by emerging market currency crises. The ones we've seen in Turkey, Argentina, they've seen about 60 to even 100% depreciation over the last couple of months. Of course, this was led by internal factors, but one of the key common factors we've seen is that the countries with current account deficits are currently the most at risk, which is why we are seeing countries like India and Indonesia depreciating as well. And of course, Sri Lanka has not been an exception to this. Yeah. So in terms of going forward, we really think that what happens in emerging markets is really what's going to determine what happens with the rupee. If there's a turn in emerging markets, even in terms of sentiment, investor sentiment towards emerging markets, whether it's related to what happens with the trade wars, whether investors start perceiving other destinations as being export hubs as opposed to China, which they're considering right now, or even in terms of what happens with the US midterm elections, where the US dollar could see some weakening, which could turn the tide again in terms of emerging markets' favor. So going forward, this would really be the key determinant for the rupee. But of course, in terms of domestic factors, how much the CBSL will really intervene into the currency is quite important to look at. They've been intervening very limited in the last couple of months, but more recently there has been rhetoric of them intervening a little bit more, especially since it hit that 170 level. But really how much they will be willing to let go of the reserves is the key question, given that we have high debt repayments next year as well as the IMF conditions that they need to meet. So going forward, really those are the factors that we'll need to look at in terms of the currency.
Right. So Trisha, in essence, it is because of the entire global factors, and also the US have been taking certain stances on their trade positioning, etc. So that has affected the currency, and we've seen capital flights from emerging markets, which has also affected all the currencies, especially from the emerging markets as well. So the likes of Vietnam, India and Philippines, etc. So again, moving back onto the local front, Trisha, what about inflation therefore? I mean, oil being one of our major bills in terms of our expenditure. So will this trickle into inflation as well? How will we see people's real purchasing power being affected therefore?
Inflation, there will be a bit of an impact, especially because of the oil prices, and more recently it's been trickling down more significantly because of the fuel pricing formula that has been introduced. So it sort of has a direct impact now compared to what was before. Last couple of months we've seen high inflation. It hit 5.9% in August. The next couple of months could come off due to high base effects, that is due to high inflation that we saw in the last quarter of 2017. So because of that we could see a year-on-year fall. But over the month, because of the even bus fare hikes as well as the gas price hikes that we have seen, we should see a bit of a pickup. But overall, it's not really worrying in terms of the CBSL's inflation targets. It's still supposed to be within the 4 to 6% range. So we're not going to really see the central bank specifically trying to target or change this in any direction.
Okay, so what we will see is because of the higher inflation that we experienced in the previous year, that the base effect is going to come into place, and we might see not so, but still on a month-on-month basis, we might see certain increases coming in. Treasure. So again, with the CBSL now targeting more rather than exchange rate targeting, they have mentioned that they are going to be inflation targeting. So do you think the intervention is less is because of that, in terms of the CBSL intervention in the currency market?
Yeah, it seems like more recently, in terms of what they've been saying, they've really been trying to keep the rates low. I'm not really sure whether this is in line with the inflation targeting, since they've not been really focusing too much on that. But I think the fact that they're not trying to control the currency is very much because of they want to preserve the reserves. I think that's really what they're going at.
Trisha, like you exactly touched on in terms of rates, Trisha, where do you see the rates? I think the policymakers and the regulators have been trying to keep the rates low. It's quite very evident when you look at the market. But where do you see the rates heading from here? I mean, I feel there is a huge upward pressure if we see more capital flights from the Sri Lankan markets as well. You're looking at the bond markets as well as the equity markets. Where do you see in terms of rates heading in that context?
Well, we see that, like we've seen in the last few weeks, rates are going to start heading up. It's been quite muted this year, but more recently it started heading up, and I think this pattern will continue, particularly going forward with the uncertainty that comes with the budget and what's going to be in it, whether it's going to be populist, with the elections coming forward. So there's going to be a lot of uncertainty in the lead up to that. And again, of course, the fact that they've been highlighting debt repayments coming in 2019, this is just going to continue on into 2019. So what we're really expecting is that the rates would continue rising. But in terms of the central bank's monetary policy stance as such, we're not really sure whether they will hike rates compared to what we've seen in other countries trying to limit their capital outflows by hiking rates. The CBSL hasn't really hasn't taken a similar tone on this. So we don't really see that they would implement any rate hikes going forward.
So with the limited, we're expecting not to take too much of a stand. Do you think our reserve positioning is good? Looking at our external sector, Trisha, do you think trade deficit, and then how about our currency position in terms of our reserves? Do you think this is at satisfactory levels? Have we met the IMF targets of our reserves? Where are we in that context, Trisha?
Actually, in terms of external balances, in terms of trade deficit and the current account deficit, we've actually performed quite poorly this year. The trade deficit grew by about 20% for the first half of this year. Exports did pick up compared to what we saw last year, because we've seen the GSP plus seeping in, with textiles and garments seeing higher growth. But imports have, of course, even actually doubled this sort of growth. With the fact that fuel prices have increased, fuel expenditure is one of the highest components in the import basket. Also, vehicles, the high imports of vehicles have really been a key factor in driving this trade deficit higher. Of course, the government has taken some steps to try and limit these imports, but that the impact of that is really yet to be seen.
So yeah, so in that case, I know what they did was also in terms of opening up LCs, that for vehicle imports, specifically have 100% of the equity or 100% of the money available. So it's really not on credit for them. So they've been limiting in terms of people's importation, etc. through that. Trisha, on that same note, what do you think in terms of external, in terms of you said the exports have been good. That is purely because of, I think the fishery, the fish exports to the EU was also opened up. How are these sectors specifically doing in terms of performance-wise, how their contribution towards GDP, etc.?
So seafood exports, like you mentioned, have been one of the key positives, but overall agriculture exports have actually been declining. So we've seen lower tea prices, lower tea volumes, even rubber has been suffering this year. The key driver, of course, has been textiles and garments, as I mentioned. But the positive actually in terms of the overall external balances is tourism. That's really what's keeping the current account even sort of managed at this point. Tourism has really picked up with about 15% for the first half of the year. Even remittances have actually done a little bit better compared to what we saw last year. So overall, that's what's really going to help the current account deficit going forward, even though it's still at negative.
So Trisha, in terms of the policymakers, we've already touched on it, of course, where we will see payments coming up from 2019 onwards. So I think our reserves are about 8.5 billion. Do you think there'll be more debt raising by the policymakers? Will they be raising locally, or will they be looking outside for raising this money? Trisha, what do you think in terms of, so that we can get a little bit of an idea where the rates would be heading again?
Yeah, so yes, of course, we think that the government is likely to keep raising debt. They've raised about 1.5 billion in the start of the year in April. They were actually able to raise it at relatively good rates. They've also managed to sort of maintain this reserve balance. So I think that they'll sustain it going forward into next year, but of course they're going to have to keep raising debt to service the payments that are coming forward.
So, so what we will see, they will be going out onto the market, international markets, to raise debt would be quite, because again, like you rightly put, they have been able to raise debt at very reasonable rates. Plus, I think the syndicated loan and the panda bonds might be also a good a positive factor for the government, wouldn't it be?
Yes, the panda bonds are expected to come in the next couple of months as well. There's the China Development Bank bond, that the loan is supposed to come in this year. Of course, mentioning what's going to happen next year, I think they will really have to start looking at raising domestic debt, given that we're seeing higher rates globally, so it's going to be harder and more expensive to raise debt globally. So they're going to really have to look at how they can raise it domestically.
Right. So on a final note, what are the new fiscal outlook? What is the fiscal macro outlooks that you can put in? Are there any new plans that you can add to that the government might be doing, or anything new that we should be knowing about?
So on the fiscal side, the government has tried to keep it quite tight. They've been under the guidance of the IMF to keep it relatively consolidated. First half of the year, they did manage to keep the fiscal deficit relatively managed, but this has been through mainly revenue measures. So they've been raising taxes, implementing sort of the inland revenue reforms as well coming into place. More recently, they've been enacting even the debt repayment levy, which was postponed, is expected to come in October. So the government is really still sticking into that plan very strongly, actually, going into the fact that they lost the previous local government election. So this is quite strong in terms of their fiscal standpoint. Whether it will continue is really the question. They've sort of started giving a little bit of leeway. They've raised some of the state sector salaries in certain departments. So really, whether they'll reverse any of these policies that they've been having the last couple of months will really be seen, I think, post-November.
Yeah, so definitely they'll have to maintain certain of their policies. But like you rightly put, the policymakers have been very consistent in some of their policies. So we are going to see. So Trisha, on that note, thank you very much for joining us.